Hello guys, today we'll be discussing on how to actually build your passive income on the side of your trading. So I am a forex and a crypto trader and I've been doing that for the last 4+ years. And also on my early days, I figured out the use of grid, Martingale and also other sort of leverage bots in the crypto platforms. But I did not have much of an idea of how to use them to generate wealth. But 4 years later, after losing about $4,000 or $5,000 in the market, I figured out the art of using these technologies to slowly build your wealth on the side while trading full time or part time. So, all the links for these platforms are in the description. Get those links, you'll be helping the channel and also saving some on your end as well. So I'm doing this on a mobile device today. You can also install it in a mobile device once you set it up in your PC. But it's easier if you get started on the PC. So I'll be covering up most of the types of the bots here and the concepts behind it and when and how to use them. Today, we'll be discussing about the Martingale or the DCA, or in other terms, the dollar cost averaging bot. It's something that a lot of people know, but they don't know how to implement it and the potential risks and also the potential benefits that they get with it. So just consider this as the PC, because my current PC platform does have a small problem about screen sharing since I use certain security protocols because I use it for trading. But soon I'll be planning to come on the PC version. So for today, let's just do it in the mobile interface. And the tabs are same in the PC version. So I run two bots here. And one of these, the Dodge one, is a quite old one. I just set it up while the Dodge was quite high in price. So you see it in a red. The Ethereum USDT one was a recent one and you see it in green. So what we do is we'll first go create. So when you go to create, there are a lot of strategies that these guys show. So as discussed earlier, we'll be focusing on the DCA bot or the Martingale. So the Martingale principle is where you continuously buy as the price drops in increased successions of volumes. In other terms, as the price drops, you keep on buying with increasing loads of the particular asset. In this case, let's think it's the Ethereum. So if you buy Ethereum at 1x at a certain point of price, when the price drops to a certain percentage, you advise the bot to buy Ethereum at 1.2, 1.4, or even 1.1 or even 2x in its volume, thus bringing its total volume at that particular price higher, which results in the average price of the asset, in that case the Ethereum, to be lower. And then also you instruct the bot to sell this particular asset at whatever the percentage that you believe it should be sold. Keep in mind the transaction fees of the platform also accounts. So when we go to the DCA bot or the Martingale, there are two types. One is the simple mode and the other one is the composite mode. We'll discuss about the simple mode today, and later on in the next video, we'll discuss about the composite mode. In simple terms, the simple mode uses only one asset. Let's think of Ethereum today. So we'll go with the simple mode. When we go with the simple mode, I have already selected Ethereum BTC, but of course we can select whatever the pair that we wish to have. And also there's a different protocol where we can use leverage tokens, where you can increase your profits, but also in other hands, chances of losses are also high. So let's focus on spot assets today and not leverage. Leverage tokens we'll discuss in another video in this series. So we would go, and I have picked a couple of assets that I would like to invest. So we'll pick Ethereum USDT. So once we check Ethereum and USDT, it shows the current price now, and also it shows an icon for us to go click and check the chart. When you check the price chart, you can see if in the 4-hour time frame, we are in such a bullish trend since the last few days, and we are hitting a resistance at somewhere around 1680. But if you check the weekly time frame, you can nicely see that it is testing a long tested resistance, and if it breaks through this, sky probably would be the limit. So I thought of this and did set up a DCA bot. But in contrary, if I set a buy order here, I'll have to consider a lot because I'll have to wait until the resistance it breaks, and God knows when it would happen. And also, I would have to wait till the resistance is retested, and God knows what would happen and when it would happen. And the chances that I would miss it during my sleep or while I'm just occupied with something is far higher. And it's natural as a trader to feel afraid just to enter the trade half the way because you don't know whether it's going to come down and just take out your stop loss. So this is the place where my DCA bot or the Martingale strategy comes in handy. I went ahead and put small mere $100 into this and set up a DCA bot. So if the price decides to test this resistance and go down and test another support, it would really not affect me in the long run. So what happens here is it tests this resistance, and I have set a Martingale bot, and let's do it. So when we go into the configuration of the bot, there's the AI strategy, and then also we can do it by ourselves, which is DIY. So I would first recommend to go with the AI strategy. In the AI system, there is 2 strategies, which is balance and also the conservative. If you are to note the differences of the balance and the conservative, in the conservative, you see the safety order number is 15, but in the balanced, it's the safety order number is 8. And in the balance, the volume scale is 1.5, and in the conservative, it's 1.2. So what is this? The number of safety orders is the number of orders that you instruct the bot to keep on buying and at which intervals to buy. The interval to be bought is determined by the price scale. So we would say at 1.2%. At 1.2% of a drop of price, every time it drops 1.2%, the bot would go ahead and place a safety order. In this case, it would place 8 safety orders consecutively as the price continuously drops, if it plans to do it. And the volume scale you see here is 1.2 in the conservative. You see it's quite less than the balanced one, which is a bit high risk. The volume scale is the increment of volume that each safety order would entail. So every safety order would take a 1.2x times volume than the previous order to maximize the volume of the asset as it goes down to bring the average price of the asset down. If you see in the balanced one, you see it's 1.5 and up to 8 safety orders. So it allows us to go up to 8 safety orders, which is 1.2 into 8, so which is roughly about 11.6%. So we would allow the price to drop by 11.6% and increase the volume as it goes down. But here's the problem. If the price drops below 11.6% from the current price, the bot would run out of assets to buy further down. So your bot would get stuck in a red bag and it would stay so. That's why in the conservative asset mode, you have 15 safety orders. So if you do the math, 1.2 into 15, is a quite large number, roughly around 18%. So you can allow the price to drop up to 18%. But the volume scale is 1.2. What it means is that as the volume scale is reduced than the balance, the average price as the price drops would be not increasing, not decreasing as much as it's in the balanced bot. But in contrary, we are safe and we allow the price to be dropped by 18%. Is there anything that we could do if the price drops below 18%? Of course, yes. There's some things that we can do, which I've learned through time tested. But we'll discuss that in a next video on how to recover a stuck DCA bot. In that case, let's say we stick to the AI strategy. This is a test account that I've started recently, which was off my books, and I recovered after some time. Then you can set the amount of asset, let's say $100, right? It shows not enough balance. But when I set $100 and when I press create, it would immediately buy this asset of Ethereum, and then the bot would activate. Ideally, a DCA bot is best started when the price is at a low, like any other trade. Let's say I started it today, and not in earth that you would enter buy trade at this price. You would ideally enter it somewhere here. But the problem is I missed it. I did miss the entire bull run in this Ethereum case. So what can I do? Shall I wait it to come down? I don't know whether it would come down or whether it might break this resistance and reach to the skies. This is where my DCA strategy comes in handy. So even though I missed the entry point quite down low, I can manage to enter at $1657 and hope it to drop a few, gather some momentum, and again to be in the market while Ethereum reaches the moon and get my profit. So for you guys, if you're not really sure on your entries, and if you keep on making losses, or if you want to build assets in long term, make sure that you follow the steps accurately and stay in touch with the markets. Do not risk unnecessary amounts. Test the waters first, and also follow my videos for the rest of the bot platforms that I would be teaching on how to build passive wealth slowly. Because if the market falls, you'll have more Ethereum. If the market rises, you'll have more dollars. Anyway, you're gonna get rich. So keep on following BlockFinec. Blast off.